Hello, my name's Doug Mackenzie and welcome to this week's episode of the Fintech Fix, your weekly news roundup where I'll be covering everything I can that's been big in the world of fintech in between my neighbour's DIY sessions. Yes, lockdown has got us all down. However, one thing that's been on the up has been financial transactions inside video games. Now, what the issue is here is that oftentimes it's spent with real money, and this has really come about because of the ease of access with new payment technologies and microtransactions, and as a result, Europe especially is starting to take a harder look because the common conception is children are playing these games, and are children able to create a form of gambling, or at least partake in it, with these loot boxes that are funded using real money and microtransactions? It would be really interesting to see how much of an onus or risk fintech will have to take by causing these microtransactions or allowing them for underage users. In fact, the House of Lords has said the government must act immediately to bring loot boxes within the remit of gambling legislation and regulation. Now, as I mentioned, the controversy comes from the fact that you're not paying with made-up video game money, you're paying with real money, using payment systems that a lot of children may not be used to. They might not actually even know it's real money. Now, it'll be really interesting to see where this goes in the future. Belgium has already legislated against loot boxes, so I wonder where the UK will go with it. Another interesting aspect of this is it brings into the whole concept of digital currencies. If a video game currency is legal tender within a video game and millions of people play it, suddenly, what is the worth of that video game currency? And obviously you can extrapolate and talk about other digital currencies and their worth, but this is a very exciting place to be in, and I hope that the UK government and also the games companies and fintech companies take a really interesting look at it. Now, this week in fintech news has actually been quite dry. I think a lot of people got their good and bad news out during the Wirecard scandal, which is obviously still ongoing, but it's good to see that the FCA was quick enough to move on and help fintechs that were affected by the Wirecard scandal actually be able to operate again. So kudos to those guys. Now, on to another story, and that is that Starling is actually seeking to get another £35 million from the RBS bailout fund. That's interesting because they already got $100 million from the fund last year, and with COVID affecting many businesses, they got CBILS accreditation, so it looks like they're going from strength to strength. In fact, Anne Boden was quoted saying, "We've managed to build a very successful high-growth SME business, and now we've got something like 3% of the market share. We're a safe pair of hands, to be honest." And I can't disagree. Their business banking offering is second to none, realistically. It will be really interesting to see where this story goes and to see how much of that £775 million fund Starling Bank will get its claws on. Thanks for watching this week's episode of the Fintech Fix. It's a real short one. It's meant to be 1 to 2 minutes, but usually there's so much going on in the fintech world, I can't help but cover at least the big ones. So I hope you have a great weekend, and I'll catch you next week. See ya.